scariest Nevada housing market crash just got worse. Have you ever wondered how rising interest rates and inflation impact the housing market? Well, in this video, we'll take a deep dive into the current state of the housing market in Las Vegas and how it's being affected by these economic factors. We'll also discuss the challenges the Federal Reserve faces in curbing inflation and how it's impacting the job market. But the real question is, what does all this mean for you as a potential home buyer or seller? So, grab a cup of coffee and get ready for an informative and eye-opening discussion. You don't want to miss it. Last week, CNBC News reported that the headline stated, "Fed cheers Powell says interest rates are likely to be higher than previously anticipated," indicating that the Fed is not done raising rates since inflation is still too high. The Fed may increase the pace of rate hikes if the data indicates faster tightening is necessary. They will continue to raise rates to curb inflation, and this will happen at a higher level than expected. This means that the unemployment rate will start to go up as the Fed rapidly raises interest rates. The headline discussing mass layoffs in 2022 and 2023 is evidence of this. Major companies such as Facebook, Disney and ESPN, Zoom, Dell Computers, PayPal, IBM, Google, Microsoft, Spotify, Amazon, and Twitter have already laid off tens of thousands of employees. Many other companies have also laid off a percentage of their workforce. In essence, inflation is still unmanageable, and the Fed is attempting to control it by raising rates. However, this rapid rate increase could lead to a recession or economic crash and result in extensive job losses. The personal savings rate chart further illustrates the weakening of the economy, with the lowest savings rate in the past decade. This presents a concern for individuals looking to make big purchases, such as homes and cars, as they have fewer savings and more debt. It highlights the national credit card debt, which has increased by over $60 billion in the last 3 months due to inflation. The average individual credit card balance has also risen by 11% compared to the previous year, indicating that people are accumulating more debt as their income remains stagnant while inflation persists. When individuals have a high amount of debt and a low savings rate, they face greater difficulties in purchasing expensive items such as homes or cars. This, in turn, serves as an indicator of the poor state of the economy. In light of this, let's shift our focus to the housing market. Dale, what are your observations on the impact of rising interest rates on the housing market? Home sales and new listings are decreasing due to homeowners being locked into low interest rates from the previous year and not wanting to sell. Meanwhile, high mortgage rates are making it more difficult for buyers to afford a home compared to the previous year. As a result, there will likely not be any more homes added to the inventory anytime soon. While there are currently more homes for sale than last year, much of that inventory is stale, overpriced, and unappealing to buyers. 1 month ago, mortgage rates were slightly above 6%. There was an expectation that they would drop below 6% and continue to decrease until reaching 5.5%. However, rates suddenly went back up and are now at 6.65%. There is a concern that they may increase even further, which could discourage potential buyers from entering the market. Redfin, a real estate company, predicts that rates will eventually drop to 5.75% by the end of the year, but it is uncertain how long that will take. Despite this forecast, some disagree with Redfin's prediction. Additionally, the video clip discusses a 10% predicted decline in home prices and the sensitivity of buyers to interest rates. The Federal Reserve faces a challenging year ahead in its fight to curb inflation, as there are no indications of rates decreasing. Instead, they may even reach as high as 7, 8, or 9% as the year progresses. Recent news reports suggest that average U.S. mortgage rates have increased for the 5th consecutive week, hitting 6.73% and approaching 7%. However, a Google search for mortgage rates reveals a significant discrepancy between the reported rate and the actual rate. As of March 8th, the true aggregate rate for 30-year fixed-rate mortgages is almost 7.6%, a massive increase from the 3 to 4% rates a year ago. There are no signs of the Fed stopping its rate hikes, and it is highly likely that rates will continue to climb into the 8s or even the 9s throughout the rest of the year, as the Fed tries to curb inflation. Let's delve into the situation in Las Vegas regarding the decline of home prices. Home prices in Las Vegas decreased by 5.6% annually in February. This trend is observed to be occurring in Las Vegas as the real estate market starts to experience a downturn. The president of the Las Vegas Realtors Association asserts that the market is is now balanced. However, this claim seems to be untrue, considering that there are now 4,665 single-family homes listed for sale without any offers. This figure has increased by 168% compared to the same period last year, indicating a decrease in demand. In further analysis, homes are taking longer to sell than they were last year, with more inventory available having tripled from the previous year. This highlights that within 60 days, 61% of all homes sold and 69% of all condos sold. This is a decrease from the previous year, when all homes sold within 60 days, representing 88% of the market, and 93% of condos sold within 60 days. Therefore, it can be concluded that the real estate market in Las Vegas is experiencing a decline, with a decrease in demand and an increase in supply, leading to longer waiting periods for sales. Homes in Las Vegas are taking longer to sell due to the affordability issue. The high prices and interest rates are discouraging potential buyers from making offers. This trend is likely to continue until there is a decrease in prices and interest rates. To illustrate this trend, let's take an example of a beautiful single-story modern home listed on Zillow for $840,000, which is still $33,000 higher than Zillow's estimated value of $807,000. This home has been on the market for 181 days without any buyers, despite being initially listed at over $1 million last year. The decrease in price is around 20% as per Zillow's estimate, but it has not yet attracted any buyers. This is just one of many such examples that demonstrate how homes are sitting longer on the market in Las Vegas. This is just one instance of many where homes in Las Vegas remain unsold due to high prices. Buyers are waiting for prices to come down and should refrain from making any purchases until they do. The process of normalization is expected to take most of this year. Additionally, a clear indication of the slowing of the real estate market in Las Vegas is seen in the discounts being offered by new home builders such as Richmond American. They have a vast list of quick move-in homes ready for purchase, all of which are discounted. One of the homes listed is dropped in price from $596,000 to $505,000, which is a significant drop of $95,000. Another home on the list has dropped from $561,000 to $469,000, which is also almost a $100,000 price drop. The reductions in price across the list range from $50,000 to $100,000, which is alarming since these price points are not particularly high. This suggests that builders are struggling. The reason for this struggle is that buyers are finding it difficult to qualify for homes because of the interest rate scenario. Builders are therefore reducing prices to attract more buyers. However, these price drops are a clear sign that the real estate market, especially new home construction in Vegas, is weakening. I believe that this trend will continue throughout 2023. In brief, I have a few noteworthy observations to share. Firstly, I am of the opinion that the Federal Reserve's efforts to curb inflation will require more time than what the general population expected. Secondly, with the interest rates skyrocketing, the housing market is poised to take a hit and experience a decline in prices. It is likely that the Fed will continue raising the interest rates throughout the year, contributing to the decline. However, on a positive note, individuals will earn better interest rates on their savings and treasury yields, resulting in an increase in the returns on their accounts. Thanks for watching our video on the scariest Nevada housing market crash that just got worse. We hope you found this discussion insightful and informative. As we've seen, rising interest rates and inflation are having a significant impact on the housing market, particularly in Las Vegas, where home prices are declining and sales are slowing down. If you're a potential home buyer or seller, it's essential to keep an eye on the market trends and adjust your expectations accordingly. It's also crucial to work with a trusted real estate agent who can help you navigate the market and make informed decisions. We'll keep you updated on the latest developments in the housing market, so make sure to subscribe to our channel and hit the notification bell to stay informed. Also, don't forget to leave a comment below and let us know your thoughts on the current state of the housing market in Nevada. Thanks again for watching, and we'll see you in the next video.